Hey everybody, hey, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Welcome to the new week. A new week of madness. Again, this is the usual thing that we're going through right now in the markets. But anyway, look, we're planning to get some important data this week, hopefully. Fingers crossed. But about all this and a little bit more in my webinar. So stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen, the 20th of October, 2025. Yes, we're still in this year. I hope you had a wonderful weekend. First of all, markets aside, I hope, all the financials aside, I hope you had a wonderful weekend. You're relaxed, you're fresh, you're ready to hit the markets. Your brain is like functioning, like it's back into the action. But I hope you've managed to switch off your brain during the weekend, because, well, this is what you kind of need to do sometimes. Again, or should I say, not switching off? Probably the word switching off would be wrong. Would be constantly like keeping it on standby, right? I mean, not overwhelming yourself too much during the weekend. Look, I hope like I said, I hope you had a wonderful time. But it's Monday and we're ready to start the markets again. Look, about all the things market related, I will talk in a bit. First, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Like I said, the market this week should be an interesting one. We should be getting finally some sort of like credible US economic data. I'll talk about that in a bit. Certainly also a quickly mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Also, From Theory to Trade, Bollinger Bands, that's going to be the little webinar that I'm going to be running on the 30th of October, so please tune in, please register if this interests you, because again, this is the third episode in the series that I've recently started, where I'm picking up on the top indicators and basically applying them in real life market action with real life trades on our demo account. So yes, I think that's quite useful in a way, because to kind of understand sometimes, should we use this indicator or should we not use this indicator? I mean, is it worth it or is it not worth it? This is the place. This is the place where you have to be. So you'll find the link in the description of this webinar, or in general the most recent videos as well on our YouTube channel. So feel free to check it out. I hope I'm going to see you there. Anyway, ladies and gentlemen, let's have a look at the economic calendar. First of all, let's take a look at the Monday. What happened on Monday? Well, on Monday today we had some Chinese data. This is what the market is talking about right now. It was a little bit of a data dump here, I would say. Japan likes to do that as well, but so we got the loan prime rate, the 1 year and the 5 year, so those remained the same, unchanged. And I think that the PBOC, the People's Bank of China, doesn't really want to go below 3 on the 1 year. It seems like that, at least for now. How can I say? It's okay. I mean, it's fine. I mean, although they have a little bit of a demand issue in the country. But I think that they're, standing their ground. They don't want to look maybe desperate or something like that. They want to, show that the economy is still strong. So maybe it's more of like an image thing, where they don't want to drop it too low, just to kind of, otherwise, I mean, you could attract, buyers and everything, but attract those who need a loan, not buyers, but those who need a loan. Look, it's a debatable thing. I mean, maybe a little drop below 3% could be an interesting option, because again, looking at the most recent inflation data, the number dropped. The year-on-year figure kind of fell below zero for the second time in a row. So there is negative inflation, and that means that there is a little bit of a lack of growth. So maybe, again, like I said, maybe an option to drop. But again, we'll see. Maybe they're more afraid of inflation kind of spiraling, getting out of hand suddenly if everybody starts taking out loans. But again, they know better, of course, than me what they're doing. So I'll leave it to them. House price index, of course, continues to remain in negative territory, because it's more of a buyer's market right now. They're lacking of, they're lacking sales. GDP growth year on year. Look, the forecast was at 4.8, kind of came out at 4.8. So that's lower than the previous, certainly, but yeah, still kind of okay. Industrial production 6.5, so increased. Retail sales year on year 3% against the forecasted 2.9, better. Yep, but still lower than the previous. And unemployment rate improved. Look, in general, I have to say one thing to everybody who's watching, and whenever we look at these economic data sets, we need to kind of take them with a pinch of salt. Not only Chinese, the U.S., European, Japanese, any data sets, because there's always a question how they measure that, and how they what kind of surveys they conduct, what's the participation rate of those surveys, like what kind of demographics they're capturing. So in a way, I would say, you always need to take them with a pinch of salt, because again, they might not really show sometimes the real economy, and we've kind of realized that, because especially with the US data, especially with the job numbers, like when we saw those NFPs kind of getting, redacted every single time or specifically the previous numbers were getting redacted when they're, when every new NFP release, which we are probably not going to get soon. Anyway, so yes, this is what's happening in China. Japan, okay, Japan did not report much, but they're busy with politics in there, because we know that Sanaya Takaichi, she's probably set for to becoming the first female prime minister of Japan, which is it's a great kind of event in a way, because it's something new that that's happening. So we'll see how she deals with the government. She did a coalition with Innovative Party, something like that. Let me just kind of get the name correctly. Japan Innovation Party. There we go. And that kind of gave her enough exposure. So there's a vote tomorrow if the sources do not lie. So we'll see what's going to happen. Most likely she's going to win. And what do we know about her? That she's in favor of spending. She's in favor of boosting the fiscal side. I mean, just going for more. She says she's for more rate cuts. Maybe that's why, and this is what I said last week in my Fridays, I think, Fridays or Wednesdays webinar, that in the beginning of the October, we were expecting the BOJ kind of to go for a rate hike with a plus 25 basis point hike, basically. But now the forecasts are sitting at the same rate, plus 0.5. Okay, so she's in favor of cutting. BOJ wanted to go for some hikes. Well, hey, let's meet in the middle, right? So let's not do anything. Anyway, so that's in terms of Japan. I'll jump into the charts in a bit, but going further, Europe construction output. So we have a few numbers here. Canada PPI month on month, year on year coming out. So keep your eyes on that. From the US, CB leading index. Okay, we'll see what's going to happen here. So the yeah, so basically we're going to see what's going to happen here. it's one of the data sets that maybe doesn't nobody looks at very often. However, when there's an absence of data, anything will do, right? So that's what we're looking at today, Tuesday. On Tuesday, so trade balance New Zealand. Yep, we have some RBA, Royal Bank of Australia, in this speeches. Just a second, sorry, what am I saying? Royal Bank, Reserve Bank of Australia. Honestly, now my brain is probably still needs waking up. So anyway, going further, let's have a look at what's happening else. What else we're seeing? ECB Lagarde speech. Yep, okay, Tuesday. Now, okay, so look. Canada's inflation. Now, this is what I'm going to be carefully monitoring. If you're trading Canadian dollar against any other pair, any other currency, then yes, keep your eyes on this, because this is going to be quite interesting. Look, for now, the year-on-year headline in CPI, it has been below 2%. Now, it has a chance now to go back up, and if it does, then it's becoming quite an interesting situation here for the BOC, the Bank of Canada, because again, there you have a target of 2% inflation, and they have been cutting rates quite significantly, quite rapidly, especially in 2024. 2025, they were kind of okay-ish. They remained, they did a few cuts here. So I can see that in January they did a cut, in March they did a cut, and then they did a September cut. So 3 cuts this year so far. And we are expected to see another one, another interest rate cut at the end of this month. Because we're going to get the interest rate decision on the 29th. So next week, basically. So that's, like I said, that's very interesting, because the inflation rate here, we don't have an expectation here, but let me check something on another source here, and let me see if what's the deal with inflation right now in terms of like what's the expectation. We know that it's at 1.9, right? But yeah, we're expecting a higher number, so above 2%. Okay, that's, like I said, that's putting the this kind of shift a little bit, because finally now they're achieving what they wanted. They wanted spending, they wanted to increase spending, so now they're gonna do another one probably, and then most likely they're gonna slow down. If inflation does come out above 2%, I think that at the end of the month they're gonna do the cut. I'm talking about the BOC. They're gonna do the cut. And then they're going to say that, hey, we're going to, monitor the situation and blah, blah, blah. So that moment, and why is important? Because this is where the point where maybe the Canadian dollar could actually start strengthening again, maybe, So basically now there could be a moment for US dollar to strengthen against the Canadian dollar still, this week, and then going into next week, or maybe closer, after the decision, again, depending on how it will go, maybe then we could see like a shift a little bit, maybe, where the Canadian dollar could strengthen, because again, if inflation comes out on the higher side and suddenly the bank says, okay, we're going to do the cut now, but we're not going to do, we're going to now take a pause, and we're not going to do, we're not going to drop it to 2%, for example, right? Because for the forecast right now is to go for 2.25 at the end of October. Let's see. Again, this is going to be an interesting moment. I think that this is how you need to play the game here. So, hey, for now, I mean, there could still be some weakness in the Canadian dollar, because we are seeing oil also on the lower side. So all the factors are kind of playing in. Now, the rest of the stuff on Tuesday, not so important. A few speeches here and there. API crude oil stock change. Okay, that's what we're going to keep an eye on as well. Wednesday, trade balance from Japan. We're going to keep an eye on that one, of course. So then we're going to go into UK with its inflation number. Now look, the inflation number is expected to go to 4%. There is a little bit of a problem, I think, in... why is it like this? Why is it... okay, let me just save it this way, but let me just go on this one and save it this way here. Yes, there we go. So, look, I think that one thing needs to be clarified, that Whenever we're saying that, oh my God, like 4%, that's already like wow. Yes, relatively to what we saw here in 2020 at the end of 2022, then 2023. Yes, that's like that's peanuts in a way, right? However, we're in a different world. This is the end of COVID. This inflation was the end of COVID. This was when the conflict in Ukraine started, and since then we kind of started shifting back down. So there was a little bit of a jump in uncertainty, and inflation kind of picked up because again nobody knew what was going to happen next, and then it kind of stabilized. So you know. It's the and then we saw everything going down because in speaking of conflicts in general, those do matter if they okay, let's put it this way, they all matter. The only thing is that what the market looks at is how the conflict can be contained. So it's when the conflict happens, initial days, yes, you have a spike in volatility, inflation might rise and like this negativity spreads. However, then the market settles down and understands, okay, is this conflict contained? Can it be contained? Or actually does it like go spread out of, through the borders? If it spreads to the borders, then the market weakens and we see a possibility of a crash. However, if the conflict is contained, then the market doesn't give a kind of a damn in a way, because then they look at, okay, it seems like it's business as usual, but but the conflict is contained. So that's the cruel world we live in, unfortunately. And I said it before and I'll say it again. We the people, we don't decide on anything, right? So we're just kind of passing by in this world, and paying our taxes. Anyway, coming back to the inflation side on the UK side, yes, we're expecting a 4% jump. So the Bank of England inflation target is at 2. So we're doubling now. So that's a little bit of an issue, I would say. It's an issue for the central bank, the UK central bank, which has its interest rate at 4% right now. So, okay, it's an interesting moment, So, they did cut when did they get cut in August. They from 4.25 to 4, and then September they kept the rate unchanged, and going into November, in the beginning of November, we're going to see another interest rate decision, and there the bank again is expected to keep their rate unchanged. So, well, of course, logically that they don't need to drop the rate because inflation keeps on rising. So actually, on the contrary, is this going to be a moment where they will hike a little bit? But we'll see. Anyway, going further, so we're keeping an eye on the inflation rate here. Core inflation is expected to rise as well. US EIA crude oil stock change, that's something that we're watching this Wednesday, but then we're going into Thursday. What else? Nothing major here, nothing major there. Some business optimism numbers from the UK, Chicago Financial Activity Index. Okay, this could be an interesting one, but look at the initial and continuous jobless claims. Those are not coming out. We were missing 4 numbers now, 4 sets of numbers, okay. Look, this will continue dragging on, but from what I realize, okay, but then we're on Thursday. We're gonna get the retail sales from Canada. The US existing home sales should come out, but okay, we'll see how that plays out. But look, Friday is an interesting one. So Australia is going to deliver its S&P Global Manufacturing PMI flash numbers. So Japan inflation numbers. Yep, we're going to keep an eye on that. At the moment, the expectation is for a higher number on the core side, and the number is expected to shift back up. So it has been on a slide, but now it's kind of pushing. It seems like it wants to shift to the upside. If it does shift to the upside, Sanae Takaichi is in a bit of a problem then, because she wants to cut. And if inflation starts picking up for Japan, any small increment, increase, it's already very sensitive. So okay, we'll see. We'll see how that plays out. But of course, we're watching the numbers here very carefully. If we do see higher than the previous numbers, then we could see Japanese yen strengthening a little bit. But the Japanese yen right now could be strengthening due to the just in general some profit taking in the stock market. Let's see if that's going to be the case. Inflation, then going further, retail sales from UK, that's what we're watching. But then drum roll, yes, the S&P Global Composite and Manufacturing and Services PMIs from UK, the flash ones. But the drum roll, US CPIs. This is the number that is expected to come out on Friday, and what I was saying, look, on a Thursday we're not getting those continuing initial jobless claims, but as I understood, they decided to make a little bit of an exception for the US CPIs because the market needs those, and what's most importantly, that the Fed needs those because. Look, the Fed's interest rate decision coming up next week on the 30th. On the 30th. Let me show you what is it 30th or was it wait, this is the 29th. I think it was 29th, sorry, not the 30th. 30th is my webinar, that's why it's stuck. Yes, 29th Fed interest rate decision together with Canada. So the Fed kind of needs the number to understand what's happening. Look, with the Fed, I think CPI or no CPI, I think it's already kind of done. They're going to do that cut at the end of October. I think there's just more politics involved right now that they need a number. They're still going to do the cut, and they're going to go and do the cut next month as well. We're expecting, so basically, by the end of this year, we're expecting two rate cuts. The only thing is that certainly what everybody's waiting for. And that's the NFP number, because look, that did not really show up very well. We know that. ADP did not show up very well. We kind of have a hint that the NFP should not have showed up very well as well. But we conveniently jumped into US government shutdown before, so. Look, my theory is this, and I said this, and like I said, I spoke to my colleagues about this as well. So this is like an interesting moment. You have your JOLTS coming out. This was at the beginning of the month. You had your JOLTS coming out, then you had the ADP. It was a total. It was a total failure. 3 times in a row, 3 times now in negative territory for the year. And then we were supposed to get the NFP, which was already very close to zero. And I think that if NFP would have showed up in negative territory, now that would be a bummer. Now, and I think that this is what they kind of, like I said, very conveniently postponed by going into shutdown. And the next week we saw some major AI deals coming through. So, it seems like, we had Oracles, NVIDIA's, OpenAI's, like all those guys, Walmart even was in all this. Everybody's doing deals with AI, dropping, we made a deal with OpenAI, we made a deal with OpenAI. So everybody was doing these deals, and it seems like if the NFP would have come out in a very, very bad situation, I think that that would raise some concerns. The market could actually even sell off a little bit, and that's not what probably was needed, because if the next week you're announcing these major deals with AI, whereas AI is involved, and you have a market where there's fear, your stock is not going to rise. And your stock is not going to rise, and you're basically you're not going to get the necessary jump that you were expecting after when you were announcing these deals. Again, theory, speculation. Anyway, ladies and gentlemen, so yes, we're watching Friday's numbers, U.S. numbers. So let's have a look. What are we expecting actually in general? CPI, inflation CPI year-on-year number headline 3.1 we're expecting against the previous 2.9. Core 3.1 against. Look, with the numbers is this. given that we're in such a problematic period, I will, whatever number we're going to get there, I will take with a pinch of salt, and I will be very careful to, if I can trust these numbers, because again, government shutdown, there's like inconsistencies. It's going to be, I don't know what there's going to show. So that's why, although everybody is really waiting for the number, but I think that what the market is waiting for is they're waiting for to see, what kind of number we're going to get. Not that it's going to be suddenly very influential or something. No, but I think that the market is waiting to see, I think it's just the curiosity that's killing everybody's. It's like, oh, what. I know I should not trust the number because again we're going through this stupid period, but I'm still curious. I'm still curious how much it will deviate, or will it deviate? Sorry, something fell into my eye. But actually, like I said, but the market is, like I said, the market participants, I think they're more curious to see what's going to happen, and I'm not going to be surprised if the number just comes out like bluntly and just somewhere like, close to forecast and stuff like that. So not in order not to spook the market or just keep the Fed, happy that they're on the right path and, that we need to get that cut and blah, blah, blah. So, but the real economy, honestly, like if you're looking at prices in general, it doesn't matter where you are across the globe, everywhere. You're looking at prices in the supermarket. Yes, there are some deals. However, the deals are, after the prices have been inflated, then you jump into a deal. So it's in general, the prices are higher. We have to take that as a fact. Prices have continued to rise. Don't get me wrong; they're going to be even higher next year. The year after, and unless there's a major financial crisis or something like that, then we'll have cheaper prices. But nobody will have the money to pay for those. But anyway, that's the world we live in. Anyway, S&P Global Composite Manufacturing and Services PMIs flash from the U.S. coming out as well, so we'll keep an eye on those. Ladies and gentlemen, Michigan consumer sentiment, yes, final. Now that's going to be an interesting one. Now this is something that you need to keep an eye on. I think that can be quite important. Ladies and gentlemen, let's jump into the charts. I have the USDCHF here, but let's kick off with Nikkei. Nikkei. Beautiful jump. The stock market is loving the fact that Sanae Takaichi will win, and she's a pro cut, so good for the stock market. There we go. The stock market is rallying, so new all-time highs. But again, let's be very careful because again, that could change very quickly, especially if the stock market does reverse lower. Because at the moment we're seeing, we saw a nice rally on Friday in the U.S., so maybe it could continue going, but. We need to be very careful for now. I mean, look, there still is potential for some upside. Where I'm still targeting that psychological 50,000, and I think that's quite doable, to be honest, on Nikkei. But that's a very strong area of resistance. As a psychological number, looks interesting, so I think I'll target that one for now. Shanghai Composite, we're stuck here. We're below this 3,888 zone. We want to go lower, but we're still above this little upside line taken from the low the 4th of September. Look, I'm going to keep an eye on that one first for now. This is my little target here, and then we'll go from there. Sorry, the sun is shining into my skull, and I forgot to put the blinds, close the blinds again, but anyway. Look, Dow Jones Industrial Average, let's jump into the US. Okay, look, on Friday we had a good rally. What's interesting, Dow and Nasdaq ended up with the same gain. Actually, the S&P as well. Look, Dow gained plus 0.52, Nasdaq gained plus 0.52, S&P gained plus 0.53. Okay, it's very rare that when those three indices kind of end the day with the same gains. Normally it's like Dow is the winner, and that was the previous day. Why did it not update? It did update. My numbers are jumping. Yes, that's correct. That is correct. Yes, because 0.52, 0.53 on the S&P, and Nasdaq 0.5265. Right. Okay. No, that's a little bit of a difference. So I have some problems with Finviz, as I understood. And yeah, their numbers seem to be weird. Anyway, or maybe mine. Anyway, look, this is like I said. That's why I want to show you this. So Nasdaq was the biggest performer. So why Nasdaq is not updated on their side? Look, what my problem here is with these indices. First of all, we reversed higher. Yes, we pushed higher. We're testing now this downside line again. This arrow here needs to go, no longer needed. So on the Dow here, we have rebounded perfectly and reversed away from this 45,785. If we do fall below that, I will consider a move lower. I will consider a move back down here. However, if we do push and stay above this downside line right here, that's the interesting bit, because again, this might open the door to some higher levels. Look, one thing for sure, that if we do also push above the 20-day SMA here within the Bollinger Band, then yes, more chances for this one to move higher. So let's keep an eye on that one. Like I said, we're at a very interesting spot because on the Dow, we're seeing something like this. On the S&P 500, for example, what I'm seeing a possible bearish flag. A nice pull to the downside, a little correction here back up, still within the body of the pole. And that's why there's a chance for this one to drift lower. Look, if we do push above the 6,700 territory, somewhere around here, and we do stay, and we see the body of the daily candle staying above that area here, then yes, I'm going to consider a move back to the current all-time high. But if we somehow shift back down, and this is where I need to make a few adjustments here. Maybe this one, 6,612 zone. Maybe a drop back below that could open the door to some lower levels. Nasdaq, very interesting here. Again, the same story. Looks like a bearish flag to me here, and look, we pushed above this 24,781, 82 zone. We stayed above it, so I think I need to redraw this and now to put something else. Now, I don't really like neither of these levels here. I think what I'm going to do on NASDAQ specifically, I'm just going to wait for an all-time high push. If we do push above the all-time high, I'm going to go higher. If we're not getting that, I am cautious with the upside. But certainly this looks to me like a bearish flag. We continue to kind of, in a way, push higher, or at least try to push higher, try to recover after this drop. But if we fail to recover, look, it's going to be an interesting one. But I'm also very careful about this for this whole week, because we know that on Friday we're getting the CPIs. So if there is a chance we could see, minor activity on the indices side here, maybe just flat activity, like something like we saw last week here, boom boom to the upside here, boom boom to the downside, and then kind of waiting for that Friday number. So I wouldn't be surprised if for the whole week we'll be just kind of, not really, we would be like jumping up and down here, but then Friday will decide on the trajectory. Let's see. If you're very uncomfortable with anything here, I would say you can, take a simplistic approach and wait for a drop below the current lowest point of October here. This is the low of this is the low of the 25th of September, but the current lowest point of October is this Friday's drop here, not last Friday, the Friday before that, which is around the 24,207 zone. A nice good drop below that could attract a few more sellers into the game. Let's jump into the DAX, German DAX. So there we go, a little bit of recovery here. This is a beautiful island reversal, a doji. Look at this. Wow, this is a nice move here. So nice, beautiful doji formed on Friday. There we go. Today we're seeing some upside. Look, I said it before and I'll say it again. I need to push above the above the upper side of the falling channel because we're currently in it. If we do get that move, I'll go higher. If we don't, I'm not going to go higher. For the downside, I would say if we somehow fall back below this little hurdle here, the low of the 14th of October, and because that also was seen as a good area of resistance back on last Friday actually. So if we do fall back below this 23,986.87 zone, let's round it up to 24,000. If we do drop below the 24,000, I think that this could be an interesting option for examining some lower areas. The FTSE 100, beautiful recovery here. I talked about this level, the 9,357. I talked about this last week, and I said to you, keep your eyes on it, because if we do drop and stay, because you see we dropped, but we didn't stay. So if we do drop and stay below it, I'm going to lean a little bit more towards the downside, but only as part of a larger correction back down, because let's face it, we're still above the upside line. You know, we're above a few upside lines, but this one is a short-term upside support line taken from the low the 3rd of September. If we do stay above that, then continue to trade above that, then there is a chance of a move higher. But I think for the FTSE to get a little bit more comfortable with the upside, a break of this downside line is needed, and that downside line is drawn from the high of the 9th of October. Very quickly on the dollar index. Now look, the dollar index, it's really fighting hard, and what I really want to do here is I want to remove everything and start fresh. Monday, let's have a fresh look. Look, one thing for sure, we had this upside line, we broke it, and now we're struggling to push back above it. So in a way, I would say maybe this is less important. I would say maybe let's keep an eye on this downside line instead. I think this is a little bit more attractive here. So if we do clear this downside line taken from the highest point of August, it's a short-term tentative downside line. Don't get me wrong. So we only have 2 touches here. This is debatable here in terms of more touches, but in general, like I said, this is I still see it as a tentative, but look, we can see that the 100-day EMA is proving to itself to be quite an interesting area of resistance right now. If we do clear that in the short run, there is a chance for a push higher here towards this downside line, and then we'll just kind of take it from there. Ladies and gentlemen, let's jump into the currency world. AUDUSD. So, okay, this looks like a nice bearish flag in a way. This looks, because we have a pole, we have ourselves like actually more of a pennant, to be honest, listen, because it's coiling up here. It's getting into a bit of a squeeze, and look, I will say the same thing what I said about the US indices. Watch Friday. Hopefully we're gonna get the number. At the moment it's planned, but nowadays I cannot really say. I'll believe it when I'll see it. Let's put it this way. Nowadays I don't trust a lot of data, a lot of news, like in general, because everything is so sketchy, and everything is just, if it comes out, it's probably the best thing to do. When it comes out, then we react. We don't try to predict too much because, well, unfortunately, I don't have a crystal ball. You don't have a crystal ball, unless maybe you do. But look, one thing for sure, keep your eyes on some key areas of support and resistance. Now, for now, on the resistance side, 0.6520 is an interesting level, which coincides nicely with the 100-day EMA shown as the blue line here. If we do push above it and we break the downside line, then yes, great, more buyers could join in. For the downside, I would prefer to see a break of this upside line taken from the low of the 24th of April, and then we could see a move lower. So, long story short, this is what I'm keeping an eye on. If we do clear the upside line, then yes, I'm going to lean towards the downside. So in a way, although the formation looks more bearish, I'm still going to wait for the move, and then because look, how many times we saw this one. Let's say some formations like these. Let's say they do end up let's say if this is a bearish pennant, it does end up moving lower. But first we see a spike higher, but then the body of the daily candle kind of remains, lower here, and then the next day we go lower. So, first we get a spike, kind of get rid of all the traders, hit all the stop losses, and then do the correct thing. If that's why I always wait for that thing to happen. AUDNZD, now this one's an interesting one, and I'm loving this pair. Honestly, I'm really, really loving this pair. We are in a range, but a very dirty, very inaccurate, very not a beautiful one. Let's put it this way. We have these drops here, but in general, overall, it's kind of still holding between the 1.1315 and 1.1418 levels. So it's stuck here. So I need a stronger move. I need a stronger exit out of here, and then I can decide. Oh, by the way, ladies and gentlemen, totally forgot that I didn't put good morning in the chat room. Good morning, everyone, ladies and gentlemen. Good morning, everyone. There we go. Boom. Yeah, look, in general, I keep on saying, ladies and gentlemen, this show is meant for, asking questions. If you do have any questions, feel free. If I know the answer, I'll tell you that I know the answer. If I don't know the answer, I'll say that I don't know the answer, but I'll try to find the answer for my next show. ADCHF, beautiful move here to the downside, but now we're seeing a little bit of a correction back up. Interesting. Could be a nice movement back up here. AUDJPY. Now look, this one's even more interesting. We had a strong drop on Friday and a strong recovery at the same time. So we're still somewhat above this upside line, which is debatable. Don't get me wrong. Taken from the low of the 8th of April. But I just went for more touches. Basically, there's you might draw something else here on your chart, but I just went on my chart. It was having more touches here. So for now, it seems to be kind of working, because on a weekly, you'll see that last week we held nicely above it. So in a way, that's it's kind of pointing a little bit more towards higher levels right now. But I need a clearance. I need a jump somewhere back above the 98.42 zone. If we can get that move, great. More buyers here could join in. My next target here is this 100 level, the psychological 100 level, or even better, the 101. Let's jump into actually EURUSD. Let's go. I want to go quickly into commodities, but first I need to go through cryptos. Look, for cryptos, currencies. Cryptos is for dessert. EURUSD, we had a nice push here through this downside line, but now what I'm seeing here is just it's struggling to find some buying action here. We remain above the 1.1645. That's great, but it's somehow lacking that momentum to the upside. So, and the US dollar is showing some strength right now as well. So I wouldn't be surprised if we do actually first see something like this. A drop lower, test of the broken downside line from above, and then rebound back up. So this kind of, maybe the CPIs would come out on a much higher side, and could, give, or on the contrary, CPIs could come out on the lower side in the US on Friday. This gives, this could give the EURUSD a boost, because it could weaken the US dollar. So, all that thing. So keep that in mind. Anyway, so for now, I'm watching this again. If we somehow push above the 20-day SMA on the inside the Bollinger Band here, then maybe I'll get a little bit more excited with the upside. But for now, it's a little bit tricky. EUROJPY still holding above this 175.43 territory. Look at this. This is the number that I'm talking about. And if you're wondering what that level is, it's the highest point of 2024. The highest point of 2024, good target here, good level, still holding above this. There we go. Let's see if we can remain above that area. If we can, I'm considering this arrow here as the first scenario. If we start falling, well, actually, this is the interesting thing. If we have actually fall below it, I'm going to take a neutral stand. But if we fall below the 175, I'm going to lean towards a bit of a retracement. EURUSD, I'm loving the fact that it cleared the range and cleared the 2.0310 zone here. That's wonderful. Now we're seeing a little bit of retracement back down, but we're still above that hurdle. If we do continue to trade above it, great, I'm going to go higher. If we're looking for some, downside, now this is the interesting bit. I've drawn this little short-term tentative upside support line, taken from the low of the 12th of September. So if we do clear that upside line, then yes, I'm leaning a little bit more towards some lower areas here, and then we'll just take it from there. Let's jump into EURUSD. By the way, how is it doing? Stuck. It's one of my unfavored pairs, but I have to admit I still look at it. It's like some sort of like, I don't know, it's an addiction or something. But I don't trade it. For those who are trading it, congratulations if you're making money on it. But to me, it's just a very tricky pair. But I still look at what it's doing. So I mean, look at this. I mean, this is a nice ascending triangle formation kind of, or maybe not an ascending triangle, maybe just a symmetrical almost. Yeah, something like this probably. So it's a nice triangle, so a symmetrical triangle. So if that is the case, I'm waiting for an exit. Yep. It's perfect. I mean, we can continue trading around here, but if it clears one of the sides, then that's going to be even better. Jumping into GBPUSD. So yeah, keep your eyes on some economic data. So first of all, we broke the upper side of the falling wedge pattern, which was already a bullish indication. I talked about it, and there we go. We cleared it. So that is great. Now the question is, what's going to happen next? Are we going to stay above this 1.34 zone right here? If we do, I'm going to continue targeting the upside, but maybe if let's say I'm expecting the US dollar to recover just maybe a little bit, maybe this could play out nicely here. We could see a push, back down here, testing this upper side again and maybe a rebound. But again, the 1.34 is actually quite a strong area of support. If we do fall below the 1.34, there is actually way too much temptation to actually aim even further south. So let's see. For now, like I said, I'm watching very carefully 1.34. If we do drop below it, yes, I'm going to lean a little bit more towards the downside, potentially even maybe targeting this area, the 1.3350, and then we'll see from here. If we do break below that, then yeah, we could go lower. But if this somehow holds this inside swing high of the 14th of October, then yeah, this is where, like I said, maybe a little bit of a rebound back up could be possible. Let's see. It's just an idea for now. USDCAD, very quickly, USDCAD still holding above this 1.4016. That's great. This is the highest point of May. So we held nicely above the above this hurdle. So for now it's an interesting development here. Maybe, like I said, judging with what's going to happen with the Canadian CPIs. Again, remind you, it's going to happen on. I need to remind myself. Retail sales. Yep. Wednesday, was it Wednesday? When was that? Was it Tuesday? Yeah, Tuesday, tomorrow. Honestly, so keep your eyes on the Canadian CPI. So basically, those are going to be interesting. So look, we're at a very interesting spot here. 1.4016. This is a good area of support right now. We're testing it. If tomorrow we might stay here today, but then tomorrow, if we do see higher numbers a little bit, then this is where the exciting part could come. This is where maybe with a little bit of strength in the Canadian dollar could happen. Let's see. USDJPY very quickly. So yeah, a little bit of weakness in the Japanese yen, but overall still, we're kind of overall we're still weakening, on the Japanese side. But maybe this is where they wanna. Still weaken the currency, because again they want those exports to be attractive, especially for the US. and this is, the new prime minister is in favor of those cuts. So maybe this is where, still Japanese yen could remain under selling pressure against its major counterparts. But if the stock market reverses sharply to the downside, we see a little bit of profit taking, then I would say, the Japanese yen could just automatically strengthen and, have a stronger position against its major counterparts. So for now, it's a little bit of a gamble here. Look, I would say this way, that if we do fall below this little hurdle here, this 150, psychological 150 zone, if we do fall below it and stay below it, not only briefly, but also stay below it, then yes, I'm going to lean a little bit more towards the downside. USDCHF, so we're seeing a little bit of retracement, that's fine. So in general, I'm kind of considering maybe a little bit of a larger correction back up here. Let's see if the Fibonacci will help us here. So drawing it from the highest point of October, the current highest point of October, to the current lowest point of October. So we can see that the 50 is around the 0.79, 74, 75 zone, around there-ish. Good potential target, to be honest. And we have the 20-day SMA here as well, so maybe that could play out nicely. I think this could be a nice good target, but first let's deal with the 38.2 on the Fibonacci retracement. By the way, let me just make a few adjustments here. Okay, where's that Fibonacci adjustments, because I want to change the values to percentage. I think this, yeah, there we go. So the 38.2% on the Fibonacci retracement sits around 0.7950 zone. So I think it's a good target as well. But again, the 50% is probably for me the more attractive side, and then we'll just go from there. We had a good drop last week, so maybe a little bit of recovery. And again, like I said, for this pair, I think it's quite okay to do such a recovery. So let's see if that's going to work out or not. But aiming for that 50% for now. As long as we stay above the 0.79 zone. If we fall back below it, there is a tricky moment there. Anyway, commodities, ladies and gentlemen. Gold, yeah. Look, one thing for sure. Friday was an interesting day. We did get a nice drop. We moved lower, and I drew this Fibonacci retracement this morning from the lowest point of May of this year to the current highest point, to the current all-time high as well. Yeah, we see that the 23 point, why is it this way? No, this is the wrong way of drawing it. Let me just draw it correctly. There we go. So the 23.6 sits around 4,083. Now look, after such a crazy rally, I think a 23.6% retracement on the Fibonacci measured from the lowest point of May to the current highest point of this year, I think the 23.6 is kind of quite a decent retracement, to be honest. And it's not much for, gold to do. Nowadays, gold does 100 points in a day. That's like, okay, it's gold. But previously, we had like 100 points in a day. That would be like, wow, spectacular. We look at from the percentage side. We look at it from the percentage side. So anyway, long story short, for now, I would say this way, that if you're looking for some lower levels on this one, keep your eyes on the 4,200 territory. But from the little bit of a shorter term perspective, keep your eyes on the 4,250. I think it's a good area of support. You can see we closed near that area on Friday. If we do drop below the 4,250, then yes, there is a chance of a drift towards the downside, and maybe, hey, who knows, maybe we could reach my 23.6. But what am I expecting right now? Look, in general, am I considering right now a move higher? I will consider a move higher if we start shifting our, if we start pushing back above the 4,327 right here. And then I'll aim for the current all-time high, and then I'll aim for a possible new all-time high. But at this point, I think that there could be a little bit of a retracement right here to the upside. If I see something like that, let's say throughout this whole week, I see a kind of a modest move higher, but still within the body of all the candles of Monday, Tuesday, Wednesday, and Thursday candles will be within the body of of this first body, of this Friday's candle. If we see something like that, to me this is a bearish indication, honestly. Okay, of course anything can happen, but I'll be a little bit more on the bearish side. So long story short, for now, I'm just going to observe the price action with gold at this point, unless it pushes back above the 4,327 here, then I'll start shifting my attention to some higher levels. But at this point, if you remember last week, the week before that, I kept on saying I'm aiming for this hurdle right here, the 261.8% in the Fibonacci extension, which is drawn from the lowest point of 2015 to the highest point of 2020 to the lowest point of 2022. That's what we got. We got the hit. We actually surpassed that by a little bit. I have to admit, it wasn't just a perfect hit, no, but at least we reached that target. We reached the level, and I was very happy. And look, I said that I'm still bullish, even though we hit that 4,000 zone. So everybody was like, "Oh my God, is this going to reverse or something?" No, 4,380. With a little bit. That's what we reached and last week, and then we on Friday, beautiful reversal, to be honest. I was expecting a reversal, but not such a strong reversal. But anyway, to be honest, that's the market. That's what we deal with all the time. Anyway, so you got the picture, right? This is what I'm going to do with gold right now. I'm watching this area right here. We're in between the 4,250 and 4,327. If while we remain in here, I'm not touching it. I'm just observing the price action. Silver, beautiful decline on Friday after creating a new all-time high. There we go. Boom. 54.46 we reached. And the same story, I'm actually looking at silver here. I'm looking at this hurdle here, the 51.23. If we continue to trade above it, then yes, I'm going to consider a little bit of a retracement. No, now, like I said, if we do see some sort of like a bearish flag forming, because we have a very, very nice pole here to the downside here. So if we do see something like a bearish flag forming all the way up until Friday, and because maybe on Friday, like I said, these CPIs could give us a little bit of a shake-up and could strengthen maybe the US dollar, or we'll see. Then maybe we could see this beautiful decline right here on the silver. Jumping into platinum, beautiful decline as well on Friday. Palladium as well. Look at this major sell-off. Boom. Let me just jump into a monthly. There we go. Amazing. Very nice. Very nice. So yeah, like I said, I'm going to be very careful right now. I'm going to be observing the price action here. Palladium looks interesting, but I think it will be a little bit more interesting for me if we do see a larger correction back down here. And in terms of the Fibonacci on a daily chart here, so we did already the 23.6, we did the 38.2 almost, so maybe the 50% could be nice. So let's keep an eye on that one. Copper also doing a little bit of a nice retracement. That's absolutely fine. Cocoa, right, with cocoa, I talked about this, looking at the monthly chart. This is what I was talking about. Look at this. We're still holding above this this downside line, downside support line, right? I mean, we shouldn't be looking at it this way, but still somehow on a daily chart it's working out beautifully. So look, I mean, long story short, I said it to you, and if we do continue to trade above that area, there is a chance for a rebound, especially going into the holiday season where chocolate is going to be in favor. Sugar also, keep your eyes on it, because if we do continue to hold above the 15.11 zone somewhere here, then and we push maybe back above the 16, hey, maybe there could be an open door there. Soybeans, of course, we're watching the two leaders who, continue to throw dirt at each other. The two leaders of the two top countries and economic countries in the world. And one of them is trying to convince the other one to buy their soybeans, and well, maybe they will, and this could inflate, this could push the price higher here. So like I said, keep your eyes on this commodity. It's going to be an interesting one in the upcoming days. We're currently coiling up, but we're testing the upper side of this little triangle pattern. WTI oil, I'm very close to my target, and I have said it before, and I'll say it again, $55, this is what I was targeting. So look, it's never the exact level, it's always the area near that level. So last week we came very close. We almost, where's the low? The 56.15. So we came very close to that area, and look, I said it before and I'll say it again, I'm still bearish on oil. However, It is forming one of my formations, which I like to talk about. And I said it before, and I'll say it again. Whenever we have a strong decline and then a gradual decline, it kind of follows, an up move here. And basically, do not exclude this scenario. And let me just shift the arrow here a little bit. So yes, there we go. This is working out nicely, but let's not exclude this little bump back up, a little retracement back up. Again, keep your eyes on it. Maybe we'll have a flash crash here or something like, the test of this area. Flash drop. No, let's not call it, crash. A flash drop. A flash drop to test this area. Maybe we will even create a new low, and then we'll rebound and push back up. So again, this is an idea. This is just something to keep in mind. Natural gas, let's see where we are, pushing back above the psychological 3 level. Interesting. Still, we're below this downside line. If we do clear it, I'm going to consider a move to the upside. Let's jump into the crypto world for dessert, and I'll have to wrap it up here. Bitcoin. So, beautiful move, 38.2, we reached that. So this is what I was talking about in my videos recently, where I said, look, we dropped below the 110 and said that if we do drop below the 110, below this upside line right here, I'm going to lean towards the 106 zone, 106,000 zone, and then maybe if we do clear that one, the 103, which is basically near the low of that big flash crash on Friday of where one post decided everything. Yeah, we're now seeing a major reversal back up, so the bulls are picking up the pace here. Am I getting very positive? Not yet, to be honest. I want to see if we're going to stay above this upside line. If we do, then yeah, there is a chance for a retracement back up here, maybe towards the 114 zone, which is the 23.6 on the Fibonacci retracement. I think that this is something that something that we need to keep in mind. The 38.2 worked out like a charm. If we do once again see a drop below the 38.2 around, which is around the 106,000 zone here, 106,000 and a half, then yeah, I'm going to consider some moves to the downside. Bitcoin Cash also seeing a little bit of a push back up, climbing back over the 475 territory. Look, we had a good move here. I will say this worked out nicely. But if we somehow fall back below the 475, I'm going to lean to the downside. Ripple trying to make its way back to that psychological 3 level. Let's see if that's going to be the case. But it's all the way here. So still, a big road ahead. But if we somehow fall back below the 2.37, then great. More sellers here could join in. Ethereum. Now look, okay, we dropped here to this 3,677. So I'm going to keep an eye on this one. Actually, I prefer it. If we do fall below it, I'm going to lean towards the downside. But for now, I'm just seeing this retracement. I want to let it settle down a little bit. I want to see if this is not going to end up in somewhat of a triangle pattern here. And if it is, then look, the prevailing trend was to the downside. If it's forming a triangle, then the greater chance for that one it would be to the breakout lower. Litecoin, similar story. Again, we found good support near this $90 mark, and we're rebounded. So we're pushing back up, but my upside is somewhere from around here, from around this 100.50 zone. If we do climb above it, great, I'm going to go higher. But if while we remain here, I'm just observing the price action. Dogecoin crossed back above the psychological 0.20 zone, but for the downside, I need to see a drop below the 0.1785 here. For the upside, that's why I'm very conservative on this one. I need to see a push back above the 0.22 area right there, and then we'll take it from there. Polkadot. Now Polkadot is, okay, it's climbing back above this psychological 3 level, and it's doing a good job. It had a brief drop lower here. It tested this low of the 11th of October near the 2.89.5 zone. So yeah, I think this is the barrier for the downside. If we do fall not only below the psychological 3 level, but there still could be a chance for a push higher. But if we do drop below the 2.89, I think that's my cue for some lower levels. And Tron, look, one of my favorite ones, honestly. It's like really technical, and for now I'm watching this little range here. It's roughly between the 0.3080 and the 0.3246. So, and it's basically also this coincides nicely with the 100-day EMA. So basically, this is a good area of resistance. And don't forget that we might end up in a somewhat of a range here. You know, if this holds, the 100-day EMA holds, shown as the blue line, then I will consider. I will consider maybe like a little bit of a range here, and then we'll just take it from there. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. Ladies and gentlemen, thank you for all your support. As always, don't forget to like and subscribe. But also remember one thing. Don't rush into anything, and basically, you know, have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you on Wednesday. In my next Markets Talk webinar, which is the live session, basically where you can, if you know, ask questions and participate. But also don't forget to subscribe to our channel in order not to miss the little videos that I release, the top news ones where I talk about, you know, what's happening, what's more popular, and my recent video last week, which I did, the big AI spending spree. So yeah, it's an interesting world that we're going through. So hopefully, you know, you'll like that video as well. Anyway, ladies and gentlemen, thank you very much. I'll see you on Wednesday. Bye-bye.